So Alfred, this morning we woke up and the markets were down again. What's the first thought that goes through your mind on a morning like this when all the markets around the world look like they're down?
So the first thing I look at is how much is down in the stock markets and what's driving it. And then the next thing I look at is how the credit market is performing. Because stock markets can be up or down, driven by a lot of emotions by the investors. But the credit markets really give you a gauge on where the economy is headed. Do people have confidence in the economy? So this morning, the stock markets were down almost 2%, but the credit markets were holding up very strongly. So the credit markets were down 0.2%. So that suggests that people are just reacting emotionally to some news. Some Caterpillar reported earnings this morning, 3 a.m. reported, and people were not too excited about those numbers, and especially when they guided higher cost, and people were coming with issues that have not been realized yet. So there was some volatility in the stock markets, but the credit markets were folding down. Okay, I'm fine with the economy. And if you look at the volatility index, it was up to 21, which is not a super high number. So it was not like people were really nervous. It's probably just a small group of investors that are nervous and driving this. So I wasn't too concerned about it. I think that we are closer to the end of the correction in this wave. It doesn't mean that I'm very bullish, because I think the world continues to have challenges, including one thing I worried a lot about is the world has a lot of debt. Okay, so that is not a bad thing, because when you have a lot of debt, that means that somebody owes money, somebody is lending money. So net should be even, because you have people who are very rich because they are lending. There are people who feel poor, they are borrowing. But this time it's a little bit different, because a lot of debt is actually owned by central banks, and the central banks actually don't have assets to back that up. So they were just printing money. They were just carrying it on their balance sheets. So this time wasn't. A lot of that wasn't driven by a lot of rich people lending out money, and central banks are really carrying a lot, so much debt that I cannot see in the foreseeable future how they can shrink their balance sheet. So in this environment, we continue to be more cautious about our positioning, and so we need to see some good valuations to be aggressive in positioning the portfolio. I think that's the right thing to do, managing our clients' money. We don't want to be too aggressive just because markets are going up, or too defensive when markets are down. So I probably give a
5-minute answer
instead of
2-minute
a 2 minutes. Yeah, exactly.
Okay.